prior to this time, it was just to support what we were doing. It was just a support service. We didn't consider, even when I started working about 25 or 26 years ago, we didn't consider the IT as a major component of what we did. They were just a support service provider, right? But now they are mainstream. They determine the direction that we go, actually. They facilitate virtually everything that we do. They enable the business. They redefine processes. And so without IT, or technology, I beg your pardon, there's rarely anything we're able to do going forward. And you will see that as we move on. So it also enables us to deliver services, to deliver new products, to offer the products that we have, whether as regulators, whether as business entities, whether you're working in a financial market or in any sector that you are. I think virtually every process is now technology driven. And so innovation is the buzzword now. What new thing can you bring on board, or how can you do things differently? And these are generally now being enabled by technology. Now, so in terms of history, though we talk about technology now as if it's the new big thing, but it's been there with us. In fact, it's been there before us. Who was here in 1880? I don't know if Ugudre was here, but I wasn't. So, I mean, what I found in the books was that technology has been part of the world since the 1880s. And then we have moved. So, I mean, 1886, for instance, there was the first transatlantic electronic cable, and then Fedwire, May 1918. And by the way, Fedwire is a settlement system used in the UK based on banking codes used to transfer funds. So it started 1918. So we're celebrating transfers these days. Online transfers, wireless banking, as we call it, mobile banking, blah, blah, blah. But the foundation had been built way back. And then in the 1960s to 70s, ATMs were introduced. When did you first hear about ATM? When did you first hear about it? I wasn't here in 1967, anyway, so. But I read about it, probably before you. All right? And NASDAQ, 1971. I mean, we can just go on and on. So the point really is to improve. So tech is having an issue. All right. Okay. The reason we're going back in history is because sometimes to be able to move forward, you need to know where you started from, how you got to where you are, and how you need to go back or go forward. And like Dr. Olowokere said, sometimes you even go back to where you were before because you think now that same strategy which you left may be working better now. Or you can redefine it, make it better, to adapt it to what we need now. And so history is not something that we should we should lose sight of. Now, electronic banking, unlike an online stock trading platform, started between 1990 and 2000. And then mobile modern payments, peer-to-peer lending platforms, 2005 to 2010. And then between 2010 and 2015, we had digital currency, we had crowdfunding. So the things we are beginning to work on now, or use more now, started a few years ago, 2010 to be precise. And then robo-advisors, digital banking. In fact, Nigeria, I think the first robo-advisor we licensed was licensed before year 2020, definitely. And then we also had one that we had even given a letter just permitting it at that time. You know, some of these things were strange, or they were new. Let me not use the word strange. SEC encourages innovation. The road to us to say, okay, we can do things differently. Can we go about it this way? And we're like, okay, much as we may not have an exact provision for it, yes, do it in this manner, but in a controlled form, report to us, and then we can take it on from there until we finally license one robo-advisor. And then in recent times, we now have digital stockbrokers, or digital brokers rather, digital securities being offered. And we have open banking in the banking sector. We're looking at open finance in the capital market. And then we also have online lending already all over the place. Now, tech innovation in the capital market. So I'm not talking Nigeria capital market now. I'm saying capital market globally. May include Nigeria, but I'm not focusing only on Nigeria. So you've got big data. And and algorithmic trading. So what does tech really do? Or how does it impact what you do? Sometimes tech is a disruptor. Just comes, disrupts what you know how to do, and brings in something really new. Sometimes it's actually very gentle, right? It enables what you know how to do. It's not very disruptive, and so you flow with the tide. It just gets you better very slowly. So sometimes it's very rapid, sometimes it's slow. It makes you just do things very differently. Now, big data, how does that help anyone? There are a lot of things happening these days, especially in the financial sector. Large volume of data that we all have to deal with. Depositories will tell you a lot about it, particularly in Nigeria and of course elsewhere. How then do we manage it? So big data is what goes on in that place. And algorithmic trading has to do with high volume of trades and of course the regulations, so to speak, that you put into the system that allows proper settlement of these things and prevents chaos while trading is going on. Blockchain and DLT. So I think that's the aim thing for a lot of people. How many of you invest in crypto? Why is Uguru always waiting? I'm not talking to you, Uguru. Are there any crypto investors here? All right, there are none. Okay, one or two. Or maybe okay, so it's, you don't want to disclose. Okay. Some of them are beginning to show their hands. Don't worry, we're not investigating anything. I've not said you've done anything wrong anyway. Okay, so, but this technology drives trading in cryptocurrency, Bitcoin and the others, right? AI, machine learning, they helped us. These ones, I think speed is what they bring to us that is most obvious. So they facilitate regulatory technology, the robo-advisors as well, quantum computing, like I said, dealing with a lot of data, automation. And then PwC just recently reminded us of what we know. So sometimes you need to hear these things over and over so that they can stick. That the future of countries, businesses, and even individuals will be more dependent than ever before on adoption of technology. I don't think this is disputable. So for those of us who started off not using tech so much. So again, remember I said, well, the history of tech that I found was started from the 1880s. I can't say that tech wasn't there when we were learning. But I know quite a number of Nigerian graduates who studied computer science without touching a computer. In those days, I don't think we're going back there anymore. Are we? Is it possible? Because everybody now uses it. It's the norm now, right? But we need to remind ourselves. And so it's not about where we are today. It's about the fact that technology will continue to be an enabler. It's going to continue to redefine things. It's going to technology itself keeps changing anyway. So it's going to continue to change how we do things. And our own resolve to be flexible, to be able to learn, makes a difference between how things were in the past and how they are now. Honestly speaking, whoever refuses to learn, to adapt to the use of these resources, I don't know what it will be like, but you'll probably not be part of the society in the manner that you are now anymore. So you find out, I mean, my dad is 86 and he understands the use of social media more than I do. Oh yes, very active. Because he realized, oh yeah, to play in this society, to be able to flow with my grandchildren, I need to learn this thing. And he's got more time than me anyway, so he's learned it faster than me. So when we talk about tech, and by the way, when I was thinking about this topic and then I saw something about next-gen investors, I wondered if it was all about youth. Is it about millennials and Gen Zs alone? Because there are adults, there are oldies indeed, who are also learning technology, right? There are oldies who are still investing. So it depends on what you want. For some people, investment is a habit. For some people, you have to push them to do it. For some people, it's not just there at all. 50-something% in food was what Dr. Lowo Kere said. Others will spend all the time on calls because it keeps them happy, right? They don't even know about this investing. And I must say we should give a shout out to FCSL for organizing a forum like this and encourage other CMOs and other participants in the financial system to do it, because we can't overemphasize the need to continue to enlighten ourselves. A lot of people have got a lot of money, but they don't know what to do with the money. They don't know what to do with the money. So it's not just about whether we can meet their needs. They don't even know what we have. They don't even know what we have. It's good to continue to churn out new products, but we have to keep enlightening people. Otherwise, we'll continue to just wink in the dark. What we have in Nigeria in terms of product offering in the financial system is substantial, but the number of investors is not. And I don't think it's about lack of funds. I think it's just more of lack of knowledge. And sometimes there are a number of pain points which we would address. Things around customer journeys. How long does it take me to get into the capital market and start to invest? How quickly? How easy? Those are part of the things that we will be addressing. So, of course, meet the needs of the next-gen investors. Are you guys next-gen investors? I thought you should be investors currently. Oh, yeah, you are? Okay. I hope you've signed on to register, to invest in the capital market. All right, so the impact of technology in the capital market. I just decided to bring out one or two things here. MTN did the first e-offer, by the way, done in the capital markets was the MTN offer for sale of 2021. It was electronic end-to-end. Yes, some people still filled paper, but we made sure that all the receiving agents converted them into electronic form before the register's records were updated, or indeed before allotment. And what did that do? The average age of investors in the MTN offer in 2021 was 32 years old, which was quite different from what we had in the capital market as a whole. At that time, the average of investors hovered between 57 and 58 years. MTN alone had an average age of 32, and that has brought us to where we are today. The average age of investors per CSCS records in May this year was about 48 years old. That feat we achieved just because of that MTN offer. And that tells us that technology helps to make things happen, helps to raise interest of people in what you do, helps to bring about ease in investing as well. So when people say, oh, the Gen Zs particularly don't like investing in stocks, I do not support it totally. Because if they don't like investing in stocks, they won't have invested in MTN. So I think a few things drove that investment. One, the ease, because it was tech-driven. Two, maybe the reputation of the company itself. And I think three would be regulation, because you know that you'll be protected anyway. So tech has to be well adopted in the market if we want to continue to have a repeat of that. And that's why for the banking recapitalization, which has started, even though they have about 2 years to do it, we've seen that adoption of tech is number one. NGX has led the way by starting up a platform, which by the way SEC has approved, to facilitate e-offers. Now, we didn't do anything partial. We've had rules on electronic offering, right, for some time. And that's why we were able to use that rule in the case of MTN. But we're saying, okay, let's learn from that. Despite the fact that we had very good achievements in the MTN offer, what else can we do differently? And so a new platform has been built that is probably better than what we used before to facilitate more investments and make it easy for you guys to invest in. Now, part of what the SEC has also done is to make rules that engender the use of technology and facilitate those who want to provide services that rest on technology to register with us. Don't forget, I didn't introduce SEC. I assume that the audience will know about SEC. So maybe this is the point where I'll have to pause to talk a bit about SEC. So the SEC is Securities and Exchange Commission. It is the apex regulatory body of the Nigerian capital market, meaning that it is the leader of the pack when it comes to regulators. And that simply also implies that there are other regulators in the market. These other regulators will include the exchanges, who themselves are regulated by SEC. Have I complicated anything? No, right. So we've got SEC has got a two-pronged mandate, basically to regulate the market and to develop the market. But hidden in this mandate, or deriving from these two mandates, is a cardinal responsibility to protect investors. Meaning that whatever it sees that is going on in the capital market, much as SEC encourages innovation, SEC also has to ensure that investors who put their money in these markets are protected to the extent that we want to be sure that all the players in the market are regulated by SEC. So whoever is asking you to bring money to come and invest must have been registered by SEC. And then SEC ensures that the persons who run those companies are also fit and proper. So we register the companies. But don't forget, companies are not human beings, are they? They are run by persons. Those persons are also registered by SEC. Their directors are known to SEC. Their principal members are known to SEC. The principal staff or principal officers are also known to SEC and indeed registered by SEC, to ensure that we can always pull the plugs. Why do we have to pull the plugs? So we say, okay, you're registered, go ahead and sell securities to the market. But when we think that you have violated, when we know that you have violated our rule, we begin to intervene. We ask you questions. At some point, we put a stop to what you are doing. We're suspending you. You can't go on. If we find criminal elements in what you're doing, we hand you over to enforcement authorities, so that we are sure that our market is not a haven for fraudsters. It is not a haven for money launderers. And so as we come to fora like this and make presentations and chit-chat, the same Mrs. Rufai can also appear with us a smile. Talk, baby. Sometimes we can't smile. We don't smile at all. And sometimes we do smile because, of course, MKO Abiola said it takes two hands to shake, right? You can't shake with one hand. So if we make regulation and there are no regulators, there's no impact. So we need to work together so that when we make regulations, the regulators are also voluntarily complying. And then at some point, the regulators can even come to us to say, well, this regulation, you now need to go back and look at it. It is no longer trendy. It's not supporting business anymore. It was the case in those days. But now, this is the new direction, which is what has now brought us to where we are, where we're beginning to say, okay, fintech operator, come inside. Crowdfunding intermediary platforms, so you to come inside. Digital broker, we are welcome. Digital fund manager, you to come inside. Everybody, it's not everybody come inside, it's not forum. So far, we've licensed 9 of them. All right, it's still open. There are more of them to be registered. We have a few applications we're still considering. If you meet the requirements, we go ahead and register you and begin to look at what you do. We also have a regulatory incubation program, and we have 2 entities in at the moment. We're finalizing rules on the accelerated regulatory incubation program as well. So the incubation program we have now is a 1-year program where we encourage innovators to come in and let us understand. So it's about us working together. First, it gives you a quasi-approval to say, okay, we know you're already doing this. You are meant to be registered by SEC. Okay, maybe regulation came late, but you bring it to us. Let us look at it. Let us understand it and jointly develop rules that will guide you going forward. So the fact that you started before regulation does not mean that you have a protection to continue to do it indefinitely. The fact that you are going to work with us to make us understand what you are doing, and then we in turn make you understand what regulation looks like, does not stop us from pulling the strings when we need to. Do you understand? You know who the regulator is, and you know who the regulator is. In the RI program, we talk, we learn, we discuss. When you are out of the RI program, we determine whether you are still fit to continue to do that thing that brought you into the program. And if you are fit, we then come up with rules. We may at that time have even come up with rules that suit you. Or we determine, okay, this existing rule even suits what you are doing. You are just calling it a different name and enabling it by technology. Or rather, okay, we will come up with a different rule entirely for you. So this is about sex saying, let's be in the arena together. Look at what you are doing together. Permit you to continue to do it. Or stop you from doing it. Right? So it's about working together. So we can't clap with one hand, we realize that. And then the registrars have also started electronic voting during AGMs or other such meetings. So time was, I'm sure that many of you have attended annual general meetings before. Time was when it was all around show of hands alone. We still do show of hands. But imagine when there's a poll. If there was no electronic voting, they will now be using paper and biro and calculator to calculate number of shares. One hand equals, you know what it is when you are doing a poll? One hand equals to the number of shares you hold. So imagine if there's a room of 1,000 shareholders and then we have to do manual calculation. So we've started electronic voting. We've also started electronic meetings, by the way, because BFA allows electronic meeting for private for companies. So I mean, there are a few other things that had started way back. I only brought up the relatively recent ones. So we've had electronic trading in our market for a long time. We moved from call over to electronic trading in 1999. CSCS started 97. We started remote trading by stockbrokers many years ago. I mean, these are technology driven. Now people can buy shares by themselves. Once upon a time, you always had to queue up at the door of a stockbroker. I'm sure you are all aware that you can buy shares by yourselves, right? Is anybody not aware? Is anybody aware? Don't show your hands, just say yes or no. I'm not ticking any boxes. All right, I mean, I'm only just saying that the market is not crude. So we've had a technology-driven market. We're only improving the market. Now, so what opportunities exist in the market? The widespread adoption of mobile and internet technology is turning it into one that is driving different demographics into the market. So there are people who would not have been part of the capital market had technology not been an enabler or had technology not been there, right? The Gen Zs, the millennials, who also appear to be in focus all the time these days, are also getting into the capital market. And by definition, the capital market is more extensive than you think. So I'm not talking of shares and mutual funds alone. I'm not talking about bonds alone. Even your crypto is now part of capital market. Even though some of us have generational issues, we are still struggling to. But it's part of the capital market. But the mainstream capital market has to do with you investing in some of these long-term securities that could be traditional in nature, but have their own advantages. So you become a shareholder of a public company when you buy shares in that company. We expect that you have a long-term outlook and not the hot money type of. Some people have that hot money blood, right? They're always quick to. So, I mean, trading is good, but you need to settle down at some point, depending on the nature of the investment you have. We don't expect you to put all your eggs in one basket, so we expect you to have a bit in different types of securities so that you have a good balance. So what has technology done? It's encouraging the improvement in the depth and breadth of the market. Product offering is improving. We've got many players. That is more operators coming in, more investors also coming in, new possibilities. I mean, whoever knew that someday whoever knew in the past that we could ever come up with the virtual asset service provider rules in the same jurisdiction where banking for digital exchanges was outlawed, and then another regulator says, well, we see them as crypto assets. You come to us, right? It was a dilemma, but I think we're getting to the end of it. And then there's increased liquidity, like Dr. Afolabi really rightly explained. It's about who's got what and who is playing in the space. The more activity you do in the capital markets, the more liquidity we're talking about, the more you also understand that investment is a higher step than just saving, the better it would be for you. So I know many of you must have learned the word saving since you were small. When a visitor will come and your mom will collect it and put it in what we in Yoruba land will call kolo. And then some of you chose to call piggy bank at some point. But the word kolo still resonates with many of us. Especially the way it was in those days where you had to break it to be able to get your money out. So you rather just keep dropping your little notes or coins in them until someday when your mom says, oh, let's break it and see how much you have. So we all learned the habits of saving quite early in life. But beyond saving is investment, where your money now has to begin to work for you. And that we need to understand that leaving the money in the, so by the way, banks are part of the financial system. But every institution in the financial system is designed for a purpose. So if you leave your money in a savings account, what do you really get? The best you probably get will be 2 to 3%, right? And it's conditional. If you withdraw 3 times, you probably won't get anything. I mean, different banks with different stuff. But if you invest, it means you have a long-term perspective. You expect that the money generates more income for you, all right? And you are doing it for a purpose. Some would say save for the rainy day. Some would say having hidden assets, not loud assets. Because, I mean, Warren Buffett, I don't know. He probably has houses, but who sees what he has? When I say who sees what he has, you've got more investments than the physical real estate that people see. And those intangible assets you have, which are called investments, probably represents far more than what somebody who is priding himself in real estate has. By the way, real estate is also an investment that is encouraged, right? So just try to have bits of everything. In the capital markets, we encourage purchasing of stocks. For the generation that I think I'm talking to, we encourage you to invest in collective investment schemes for the reason that the operators are experts and can help you to take certain decisions that you may not be able to take by yourselves once they understand your kind of person. So we say they should profile you, right? How many of you have patronized a fund manager before? I'm not talking to people around that table. No, I mean, the reason I ask is because I want to understand how to deal with you. If somebody doesn't try to understand your kind of person and understand your investment objective or understand how much you earn or how quickly you would need your money back, and you give your money to him, then you're in trouble. I mean, even you, the investor, because he may not understand your need. So if you are like, you know, Ugodre has gray hair, so he's probably like 80 years. Right? He can't take too much risk. He can't take too much risk. And then you are probably in your 20s. You are still doing life. You have not even seen life, Steph. Right? You probably are willing to take more risk than he is. Some people say, well, economics will tell you the higher the risk, the higher the return, which is largely true, but sometimes may not always be. Right? So I'm only saying that your profile and his profile may not be the same. Your investment selection is not likely to be the same. Except it's like my dad, who still just has a habit of buying shares, even at 86. His own is a habit. And you can't change that. So if he says, this is what I want. I mean, the man still asked me 2 weeks ago, hello, the first bank, can see. How much is first bank now? Well, you don't expect him to still invest in shares. That is his choice. And then with his broker, of course, he puts it in writing to say, buy this for me. Right? Ordinarily, it is unlikely that you will find a professional advising to put his money in shares. First bank may not be bad. I'm not talking specifically about any security now. I'm only just saying. Right. So improved efficiency with AI. My time, right? I'm the regulator here. So with AI and machine learning, a lot has to do with speed, accuracy, detection of patterns, and fraud detection. So I must also say that in this tech world, we've also seen a remarkable volume of fraud. Okay, which is one of the reasons why SEC as a regulator must get in that space, right? So the so-called, I'm sure you've heard Ponzi schemes, right? So just as we have Ponzi schemes in the traditional capital market, well, no, traditional market, maybe not capital market, but traditional markets, we've also seen them on the DLT side. And so we need to continue to monitor the market and enforce regulation. Make sure that we no grief for anybody. We punish any offender. Otherwise, the market will not be okay for you and I to play in. All right? And then long-term cost reduction. So tech helps you on a long-term basis to reduce cost. Helps to reduce human intervention, and so labor costs may reduce. And the cost of maintaining legacy systems may also be there. But again, on the flip side, investment in tech can be very expensive. People make some mistakes though. So some people deserve or actually need, maybe not deserve, some people actually need to drive a Corolla, but they decide to go for Rolls Royce. And I am serious. So if the objective is to get to your destination and a Corolla will take you there, what makes you drive a Rolls Royce? For different reasons, prestige especially. But if you do that with tech, the tech people have mixed with us finance people. These Ramoni people, these Surface people, they've mixed with us. They're just thinking of money, 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 money. To the extent that for your software now, the annual fees, licensing fees, before when they didn't know, they would just sell you a package, pam, one-time payments. That was when they were tech people in their space. They now left their space, come and mingle with us that understand money. Somebody now advised them wrongly to start charging licensing fee. So if you now buy Rolls Royce instead of Corolla, you know what your licensing fee will be every year. And that's the problem. So you see some companies start and they're unable to go on. You see them use certain software, they're unable to go on. They provide some service and have to stop. Because sometimes, while we expect tech to reduce your cost, in some cases, it does not. And then, enhanced transparency. So with DLTs, we've seen that largely there's more transparency, even though we have also recorded some or noted some fraud on those platforms. So for us as regulators, what are the challenges? Adaptation. So some people are not flexible. Don't worry, we are flexible. We've come up with our rules. But adaptation is one, moving away from the traditional way of doing things to the new way of doing things, or indeed dealing with you, future generation of investors, moving from the way we have monitored the stock market or the bond market since 1979 that SEC started, to now having to deal with crypto market, right? You know that we can't do it the same way. So how to adapt to it. Cyber threats, the more you use technology, the more the cyber threats, and then we need to also continue to deal with that. Market integrity and stability, the potential for fraud, which I have talked about, is there, and then the need for us to be very vigilant and have tools that would help us to detect these things and probably prevent them. Collaboration with also other regulators will also do it, help us. We can't do it all alone. Globalization, so you have a lot of cross-border transactions. Indeed, borderless transactions. The world is a global village. We are regulating in Nigeria. We've got our laws, but you're able to do transactions worldwide. And then foreigners are also able to do transactions here. So connectivity to the world is an advantage. It is also a disadvantage because there are jurisdictional laws that may permit certain things that are not permitted in certain areas. They actually may even prohibit the same thing, but with collaboration, we begin to have alliances. So, for instance, we've got an alliance with IOSCO that enables us to exchange information and, of course, touch on all of these people. So evolving market structure, the structure of the market continues to change. AML, CFT risk, that is money laundering and the likes of it. The risk is also very high. We've seen that, okay, I don't know if it's true, but NSAS, that's not money laundering, but I mean, certain things were used to finance certain things. So also, there's a lot of layering in that space. And so the possibility of losing track of the illegal source of funds that were converted to digital assets or currencies is also very high. And so for us as regulators, that is a big challenge. So what can we do to help ourselves? Regulatory capacity and expertise, we have to continue to learn. We have to continue to learn. Otherwise, we become very rusty in a very short period of time. But we can't allow that to happen. So we'll continue to learn. And we also continue to enlighten the public. We collaborate with operators to do it because we can't do it alone. Adaptability, having an agile framework, a flexible one that also allows us to be able to do things very differently. Time was when rules were very, very rigid. Now you're trying to write rules with collaboration of lawyers like Tobe that is looking at me, so that the wordings allow some flexibility. Rigidity is no longer the way to go because the time it takes to change the rules or to amend the rules can be better spent in something else. So a bit of fluidity here and there with the help of legal people help us together. So cooperation, like I said, globally we've got IOSCO, we've got other alliances anyway, and then in Nigeria we have the Financial Services Regulation Coordination Committee. Enforcement, I can't say that enough. We will continue to monitor and we will continue to punish offenders, not because we desire to punish, but because we have to help to shape behavior. And it has to be a deterrent to bad behavior anyway. And then data privacy issue, that's a very big thing for all of us. The data, the way we handle data is important. People have a right to have their data protected, and so we have to be very careful in the tech space when we do all that. There are other ethical considerations about appropriateness of AI. What you put in is what it gives out. Who's tried using some of those AI things? I try to get to work with my children sometimes, and then you ask one question, you're like, is this person a dumb person? What kind of answer is this? Or it gives you an answer and it says you can substitute that paragraph with a verifiable reference. And I'm like, why did I ask you if you're still going to ask me to go and look for a verifiable reference? So it's about what you put in, how ethical are the things you put in, how correct are they, and things like that. And how appropriate are they, how reliable are they. Robo-advisors are there in the capital market. What do they churn out? How do they churn it out? Those of you who send out advisories every week, stock recommendation, are you forcing us? Are you telling us that you are sure? The language that you use. Some of you are beginning to use tech to do it. We have to be careful about all of those things. So again, how we are responding, we're building capacity. We've got that regulatory incubation program that I told you that helps us to onboard people with new ideas, and then we will then determine how to protect investors and of course make regulation for them. We've got this portal, and that's very important to mention. We've got it, we call it the FinTech portal, so it's sec.gov.ng/finport. You find a lot of information on all these tech-enabled or tech-savvy service providers in the capital market there. And it's also, from there you can also find out how to get into the RI program if you have to get into it. We collaborate, like I said, we are members of IOSCO, signatories to the MMOU of IOSCO. Now we're also working on an identity management product, and I think I need to pause to talk about this a bit. The identity, so although it is given that construct identity management, it goes beyond identity management. So we're trying to, I'm a secretary of the committee now, but it's a market-wide committee headed by Aigboje Aigimokwede, CFR. We're trying to look at how to manage identities better in the capital market, because we see that some of the problems we have Legacy problems indeed, but they were based on issues of identity, unclaimed dividend, for instance, not paying your dividends, the issue of unauthorized sale of shares, blah, 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 blah. A number of challenges that we have in the market, peculiar to the traditional space, are based on issues of identity. But beyond that is the issue of the customer journeys. How can we make our customer journeys more nimble and attractive to people? How can you sit here and open an account? So we've had conversations with PV, we've had with Bamboo, we've had with Cowrywise, iInvest, and so on. They open accounts in 2 to 3 minutes. And the traditional capital market operators still expect you to fill 3-4 pages of forms. So we're working on how to make these things more nimble while not permitting money laundering. So what is the minimum that regulation expects? Is that minimum adequate? How can we then use technology to enable the collection of this minimum? How do we, again, although there are data privacy issues, but how do we allow transmission of this data within the capital market? So I always tell Data Protection Commission that the capital market is unique in that it is one place where when you collect personal data, it cannot remain there. So I go to a broker, I want to buy securities. He has to transmit my data to CSCS. So you have to see it as one of those exceptions, right? Otherwise, you can't settle your trades. And then for you to get your dividend, the CSCS has to transmit your data to the registrar. In the fund management space, it's about the same. You open an account with the fund manager. Some of them have dealings with CSCS. Some of them don't have dealings with CSCS, but they do have dealings with registrars. So we have to move data, and we have to move it efficiently and in a way that it is protected. But we are trying to just make those journeys more nimble so that people who don't have the patience to spend 10, 20, 30 minutes opening an account can still patronize our markets. And you are the ones who we are targeting, the next generation. All right. So part of what we have done in terms of agile rulemaking, we've got the crowdfunding rules. We released the rules on digital sub-broker, and that's why you have the likes of Chaka and Bamboo and so on. You've got robo-advisory rules. We've also got the VSP, the digital asset rules. So under the VSP rules, we've got digital asset custodians, digital asset exchanges. We have the digital asset operating platforms. And then we also have, okay, so that's, I've talked about all of those. To just show to you that SEC is also proactive and willing to regulate in this dynamic space that we are. And then I conclude by saying that the challenges faced by regulators of capital markets in this rapidly changing tech landscape are multifaceted, requiring a delicate balance between fostering innovation and ensuring integrity, stability, and investor protection. In an increasingly digital and interconnected world, the cooperation and collaboration of all stakeholders, including innovators, investors, and regulators, is required to mitigate risks and harness the potential benefits of technology for all market participants. Thank you very much for listening to me. So that I will not be charged for plagiarism, I decided to show you some references. Thank you.